A quiet revolution is underway, one that's unfolding not on battlefields, but in the world's financial arteries. As the sun rises over the world's financial capitals, a subtle yet profound shift is taking place, largely unnoticed by the average person, but with the potential to reshape the global order. This revolution isn't fought with armies or weapons, but with currencies and economic alliances. The tools of this new contest are banknotes, digital ledgers, and international agreements. At the center of it all stands the US dollar, which has reigned as the undisputed king of global finance for nearly 80 years, shaping trade, investment, and even the fate of nations. But now, a coalition of rising powers, BRICS, made up of Brazil, Russia, India, China, and South Africa, is mounting a serious challenge to this dominance, seeking to rewrite the rules of the global economy. This movement isn't just about economics. It's about shifting the very balance of global power, questioning who gets to set the rules and who must follow them. The dollar gives the United States immense influence, allowing it to impose sanctions, control access to global markets, and send economic shockwaves that can be felt in every corner of the world. BRICS is asking a fundamental question: why should one country hold so much power over the global financial system? Why should the fate of billions depend on decisions made in Washington? Imagine a world where international trade isn't always priced in dollars, but in local currencies or even a new shared currency, where nations have more control over their own economic destinies. BRICS is actively working to build that future, dissatisfied with the system they see as unfairly tilted toward the US, and determined to create alternatives that reflect their growing influence. As their economies expand and their populations grow, so does their demand for a new seat at the global table, a seat that reflects their true weight in the world. This is the story of a struggle for a more multipolar, equitable world order, one where power is shared, not concentrated. In this series, we'll explore how the dollar rose to dominance, why BRICS formed, and what their challenge could mean for every nation, business, and individual on the planet. The outcome of this financial revolution will shape the 21st century, and the world our children inherit. To truly grasp today's global financial challenges, we first need to understand the remarkable journey of the US dollar, how it rose from a national currency to become the world's unrivaled economic powerhouse. The story of the dollar's ascent is a tale of ambition, opportunity, and global transformation. So, how did the dollar become king? In 1944, as World War II neared its end, world leaders gathered at Bretton Woods. The US, with its vast gold reserves and booming industry, took center stage, leading the creation of a new international financial system designed to foster stability and growth. Under this system, the US dollar was pegged to gold, and all other major currencies were pegged to the dollar. This arrangement made the dollar as reliable as gold itself. The result? The dollar became the backbone of global trade and finance, fueling a massive post-war economic boom and cementing America's leadership in the world economy. But by the 1960s, cracks began to show. Heavy US government spending on social programs and the escalating Vietnam War put immense pressure on the dollar-gold system. Foreign countries, worried about the dollar's value, started demanding gold in exchange for their dollars, rapidly depleting US gold reserves and threatening the entire system. In 1971, President Richard Nixon made a historic announcement: the US would no longer convert dollars to gold. This Nixon shock ended the Bretton Woods era and sent shockwaves through the global economy. The world shifted to floating exchange rates, where currencies could rise and fall freely. Yet, despite this upheaval, the dollar remained the world's dominant currency. One key reason: global trade, especially oil, continued to be priced in dollars. This marked the birth of the petrodollar, linking the dollar's fate to the world's most vital commodity. Oil-exporting nations, flush with dollars, reinvested their earnings into US assets like government bonds and real estate, further strengthening the dollar's global role. Central banks around the world began holding vast reserves of US dollars, seeking stability, liquidity, and a safe haven in times of uncertainty. Over time, the dollar's dominance became self-reinforcing. Its widespread use gave the US unmatched economic and political influence, shaping international policies and alliances. Even after the gold link was severed, the dollar's deep-rooted infrastructure, global trust, and network effects kept it firmly on top of the world's financial system. This exorbitant privilege has shaped the global order for over half a century, allowing the US to borrow cheaply and project power worldwide. But today, as new economic powers rise and global dynamics shift, that privilege is being questioned like never before. BRICS started as an investment acronym in 2001. Brazil, Russia, India, China, fast-growing economies with big ambitions. These nations were recognized for their rapid economic growth and potential to reshape the global economic landscape. Investors saw them as the future powerhouses of the world economy. But the leaders saw more, a shared desire for a bigger voice in global affairs. They envisioned a platform where they could collaborate and influence international policies, challenging the existing power dynamics. They felt sidelined by US and Europe-dominated institutions like the IMF and World Bank. These institutions often dictated terms that didn't align with their national interests or development goals. By 2009, BRIC became a formal bloc, pushing for reform and greater influence. They aimed to create a more balanced global economic order, advocating for changes that would reflect their growing economic clout. In 2010, South Africa joined, making it BRICS and signaling a broader Global South agenda. This inclusion highlighted their commitment to representing emerging economies and addressing global inequalities. The alliance's core motivation, a multipolar world not dominated by the US. They sought to establish a new world order where multiple centers of power could coexist and collaborate. Members share grievances over American unilateralism and dollar-based power. Russia faces sanctions. These actions often disrupt their economies and limit their growth potential. China sees dollar dependence as a vulnerability. Others want autonomy. They are exploring ways to reduce reliance on the dollar and enhance their financial independence. Critics called BRICS a talking shop, but frustration with the status quo united them. Despite criticisms, they continued to meet and strategize, determined to make a tangible impact. Beneath the surface, they laid groundwork for real action. They initiated projects and agreements that aimed to strengthen their economic ties and collective bargaining power. Their target, the dollar's dominance. By promoting alternative currencies and financial systems, they hope to create a more equitable global economy. In 2023, BRICS expanded for the first time, welcoming Egypt, Ethiopia, Iran, and the UAE. This move transformed BRICS into a more diverse, powerful coalition. New members brought oil, trade routes, and strategic heft. Egypt controls the Suez Canal, Iran and UAE are energy giants. The expansion signaled BRICS' ambition to lead the global south and challenge the dollar's supremacy. Leaders were explicit: de-dollarization is now a top priority. With nearly half the world's population and over a third of global GDP by purchasing power, BRICS is now a formidable bloc. The alliance controls a huge share of global resources, including oil. This critical mass makes their challenge to the dollar credible. The stage is set for BRICS to build real alternatives to the dollar system. The next phase, action, not just words. BRICS' challenge is methodical, not sudden, a playbook for de-dollarization. First, they're boosting trade in local currencies. India and UAE trade in rupees and dirhams, China and Brazil in yuan and reais. Second, they've built new institutions. The new development bank funds projects in local currencies, aiming to cut dollar dependence. The contingent reserve arrangement offers a financial safety net, reducing reliance on the IMF and its Western strings. There's talk of a common BRICS currency, likely digital or commodity-backed, to further bypass the dollar. While ambitious, these steps show BRICS' long-term intent. The alliance is building the infrastructure for a new financial order. Each move chips away at the dollar's centrality. The process is slow, but the direction is clear. The BRICS challenge is about power, not just money. The dollar lets the US wield sanctions as a weapon, isolating adversaries from the global system. De-dollarization would blunt US sanctions, giving countries like Russia and China more freedom. Competing financial spheres could emerge, one dollar-centered, one BRICS-led. This shift could realign alliances, with more countries tilting toward BRICS for trade and finance. The unipolar era would end. The US would face a multipolar world, requiring more negotiation and compromise. The geopolitical consequences would reshape diplomacy, alliances, and even conflict. The world order is on the brink of transformation. The dollar's decline would hit home for everyone. For Americans, losing reserve currency status means higher borrowing costs and pricier imports. Think higher mortgage rates and more expensive goods. US exports might get a boost, but the transition could lower living standards. For BRICS and the Global South, trading in local currencies could cut costs and boost economic control. Access to BRICS-led financing could speed up development, free from Western conditions. But a multipolar currency world brings risks. more volatile exchange rates, complex trade, and potential instability. A rapid dollar decline could trigger a global crisis, hurting everyone. The challenge is to manage the transition carefully. The stakes are high for every wallet, everywhere. The world must tread carefully to avoid chaos. Experts are divided on the dollar's future. Many Western economists doubt any real challenger can match the dollar's scale, trust, and liquidity. They point to BRICS' internal divisions and China's capital controls as major hurdles. Skeptics say political mistrust and lack of a unified currency will limit BRICS' ambitions. But others, especially in emerging markets, see a clear trend. The world is moving toward currency multipolarity. Analysts like Zoltan Pozar predict a new system backed by commodities, with BRICS at the center. The weaponization of the dollar has accelerated the search for alternatives. Most don't expect a sudden collapse, but a gradual erosion of dollar dominance. The key question, not if, but when and how the shift will happen. The status quo is unsustainable. Change is coming. We're at a turning point in financial history. The US dollar's reign has shaped the world for decades, but BRICS is mounting the biggest challenge yet. This isn't a simple East versus West story. It's about the diffusion of power and the demand for a fairer system. BRICS' expansion gives the movement real weight, but the path forward is uncertain and risky. The dollar's dominance is deeply entrenched, and a rapid shift could spark crisis. BRICS faces its own hurdles, from mistrust to building a credible alternative. The most likely future, a slow evolution toward a fragmented, multipolar system. The real question is how the world manages the dollar's relative decline. Understanding this shift is essential for everyone. The era of King Dollar may be ending, ushering in a contested, complex financial world.